Will you have to pay capital gains tax on the sale of your property? Tune in to Tom's Take right now. Welcome back to the show, talking about not necessarily an exciting topic unless you're excited about saving money, and that comes to paying capital gains tax in a real estate transaction and the gain from the sale. That's what we're talking about here. So what people don't know is that capital gains tax, there's two types of it. There's short-term capital gains, which is paid on your normal tax bracket that you'll fall in, and that's for assets held for less than a year. And then there's long-term capital gains tax, which is for assets held for more than a year, and that can range anywhere from 15 to 20% based on what tax bracket and what income level you're filing. So knowing that's what capital gains is, how does that come into play in a real estate transaction? And what I know is when you get to settlement, there is a form you will fill out, and it will determine whether or not you're exempt from paying capital gains tax. And typically you're exempt when the home is your principal residence. So there's a series of questions. The first is the gain on the sale or exchange less than $250,000 for a single filer or less than $500,000 for a joint filer? If you answer yes than that, that's one step closer to being exempt. Was the property your principal residence for 2 out of the past 5 years? Did you use any portion of the property for rental or business purposes? Have you completed a 1031 exchange? I'll tell you what that is in a second. During the aggregate 5-year period, because they match it up to the 2 out of 5 number that was referenced earlier. And when they ask you these questions, they are determining if you're going to have to pay capital gains tax on the property. So when you're doing all this, number one, talk to an accountant before you do anything. I'm telling you what gets signed at settlements, and typically when people are selling their principal residences, and because it's the gain, they are not having to file capital gains unless it's a astronomical number or they made a ton of money off the property. And that's when homes and assets get depreciated. So you need to talk to an accountant here to get total clarity on this. The point is, if it was your principal residence for 2 out of the past 5 years, the sale price or the gain is less than $250 for a single person, $500 for a married couple. You didn't use any of it for rental purposes or for a home business, and you didn't complete another 1031 exchange, then you don't have anything to worry about. And again, talk to an accountant. I've said it 4 or 5 times now. It's how critical it is. So in most cases, for a principal residence, you're not paying capital gains tax. Now, if it's an investment property, it's a different story. And that's where a 1031 exchange can come in. So a 1031 exchange is a tax-free exchange where you take the gain from the sale of one asset and put that directly into the gain or the acquisition for the purchase of another one. And there's companies that do this. Not something that I handle as a real estate agent. We typically put you in touch with a 1031 exchange firm where all they do is this type of transaction because you really need to document everything very clearly. We've got a couple great referrals if you need them. So the point here is get clear on your gain, get clear on if you want to acquire another asset and defer the capital gains tax, or maybe you're going to move into that property down the line and you're downsizing. There's a lot of ways to do these things, and that's where it's really important you talk to an accountant. A lot of people aren't clear on how capital gains works. This is a very short, concise way to guide you through the sale of a residential property so you understand how that comes into play. And if you need anything more detailed, get in touch, ping me, talk to your accountant, whomever, just get the right information. Otherwise, we'll be back next week. Thanks for tuning in.